I'm going to break down SoFi, Palantir, and Robinhood, what you need to know in this video about these three stocks. Two look bullish, and one, in my opinion, based on the analysis, looks fairly bearish. I'll break down, of course, the charts, where the good setups are, the buy zones, what strategies I'm doing, modeled after smart money, and following what they buy and sell to make money on the market. Other stocks, but of course SoFi, Palantir, and Robinhood, because these are highly liquid, high beta leaders. You want to trade and invest in the stocks that are going up the most, but the important part about that is to know when to take your profits, lock in that 200% gain, and get out before it's too late. Or if you're buying longer term and your plans to hold 5 to 10 plus years, you get in where it makes the most sense at the smart money buy zones that I always break down, of course, on the channel in these weekly update videos and in my free newsletter as well. And last week, we locked in so many huge gains on a smart money trade Intel stock. We bought Intel call options right before the huge announcement of the United States taking a potential stake in the company. The stock was up huge, and I locked in 180% gains. And this wasn't a gamble. I didn't guess. I looked at smart money flow, used their strategies, looked at the chart, followed my rules-based approach that I use to place trades and invest longer term. And this one worked out very well. So for more information on how this all works, smart money flow, buy alerts, buy zones, all that good stuff will be found in the free newsletter. Links are down below. But for a recap on what's happening with interest rates, we are expecting our first cut for September, which is so interesting. I don't think it'll be much more than 25 basis points. I think much more, based on what I'm seeing right now, would be a bit excessive. And I called this back last September, actually, when we had our first shock 50 basis point rate cut because of the worse than expected job numbers. The Fed was worried about that, but all economists were expecting 25 basis points too much too soon. Didn't make a lot of sense. Now, we didn't know about tariffs back then as well, because of course you don't want to cut rates before a huge wave of tariffs. The Fed didn't know, no one knew for sure, but in hindsight that was a bit too much for that point in time. All economists were shocked across the board, and look what happened. We didn't cut again until likely this September, a whole year later. So it is what it is, and not a big deal. Again, longer term into 2026 we'll have many more rate cuts. Tariffs have proved to be not as big of a deal. There might be some minor inflation in certain sectors, and we're still waiting to see more numbers on the potential lagging effects of tariffs, but so far it has been looking a lot better. But I would definitely not want to see huge rate cuts too soon, because that's just not what we need right now. I get we want to refinance our debt. That's what the president is very concerned about. I get it's better for the high beta growth stocks we like to trade and invest in as well. And I get it might help the housing market as well, which I'm not too sold on, because what happens is rates come down and prices will adjust and go up, and homes will become more expensive, right? You need to do this the right way, and the Fed, I think, is doing an okay job short term. Although, if there are real signs of a true economic slowdown, then you have to make sure you cut. The problem is we don't know for sure if that's the case. Across the board, consumers are still doing relatively well. Prices are high, but you don't solve that by cutting rates, right? You solve that by keeping rates higher, letting the economy cool off a little bit, letting these businesses actually lower their prices to meet demand and where the buyers want to be in this market, and then you slowly cut rates after that occurs. You don't cut rates when the prices are still high, right? So there's a whole argument for and against this, and we can break that down in a future video. But for now, 25 basis points for September, that's good for the market. I'll update you guys more on that, of course. And for economic announcements next week as well, FOMC minutes, that could be interesting to see what they say, an update on inflation, jobs, tariff impacts, all that good stuff. Manufacturing PMI, services PMI, that is a big deal. Preliminary numbers, we'll see how that's looking. If they come in higher than expected, maybe we don't want to have too many cuts too soon, or vice versa. Maybe we'll have a 50 basis point cut if we really are slowing down across the board. So that's an important day as well, this Thursday, August 21st. And in terms of trades short term, I would watch out having too many open trades during this time period. If you're a longer term investing, of course, buy the dip in quality companies and the market overall, no matter what's happening. But for short to mid-term trades, even if you're doing income generating strategies like selling put options, you don't always want to do that before at least right now, a decent announcement that could move the market. If you want to have some open trades, sure, go for it. But going full port, having your entire portfolio all in open trades and not having some cash when we could have a market moving event on Thursday, maybe Friday as well. Fed Chair Powell's speech, that could be interesting depending on what he says. You want to make sure you're risk adverse, still trying to make money, hopefully following a rules-based approach, but also understanding that there could be some more volatility short term. So that's that there. I'll update you guys on whatever we get Thursday, Friday, in of course my free newsletter and in my weekly market update video as well. But for the overall market, the VIX current volatility levels of the SPY down at 15. Greed is to the max here, so almost no one is fearing a crash. Now we have rumblings of a potential slowdown. People are scared. We're at all-time highs, but the actual market, the data is showing us that people are extremely bullish right now, very greedy, and there are just many more buyers than sellers, at least as of now. But the concern is that when you're down at these low levels for the VIX, you of course want to ride the trend. The market is up. I'm placing bullish trades as you've seen past couple of days, my Intel trade as well, all these other trades I've been placing, and long-term investments. I'm still bullish, but you want to be careful because when we're down at this level, there's a higher risk of a volatility expansion event, especially on a day like Thursday, Friday, new tariff announcements, an update on the potential peace deal if that falls through with the United States and Russia and Ukraine. That could spark some volatility and we could spike up very quickly, and all of a sudden the put options you sold for income on quality stocks, those are all deep in the money. You have to buy back your put option for a lot more than you received, which is not what you want to do. You're going to be down a ton. Or if you're assigned shares, you're now getting assigned at a much higher price. Now you have to wait for that stock to go back up to where you bought it at. Now, if you're selling puts on quality stocks, you should be fine. It should go back up. But in the short term, if we have a pullback that lasts a couple weeks, a couple months maybe, you never know. 2022 was just a couple years ago, and many stocks were down so much for a long period of time. You would have had all your capital tied up into stocks that were quality, but you don't want to sell for a loss. Now you can't place any trades. Now you can't buy the dip. Now you can't get into even better opportunities at these low levels in even better companies. You always want to make sure you're selling puts, buying calls, buying shares when it makes sense. That's why I follow smart money and use their strategies, because there's no guarantees in the market, but that will put me in the right direction and help me make a much better, more informed, confident decision in the market. But for the SPY right now, what is the overall market looking like? The overall trend, of course, looks pretty good. A very strong uptrend since our tariff lows back in April, broke above the 50, 100, 200 day moving average. That was a great bullish signal longer term. I would have gotten into a ton of leaps options here. I'm doing different strategies, but in hindsight, playing specific stocks is great, right? But sometimes just playing the overall market and getting into SPY or QQQ leaps options as well when there's a long-term bullish signal is a safer and still great strategy. The leaps options you could have bought back here are up so much, and this was based on data as well. It was clear that we were going to continue to go up. So of course I'll alert you guys on when the next big opportunity like that occurs, because there's always so many opportunities that pop up in the market. We're struggling to break above all-time highs, though, short term. So, again, this was a concern area. A couple days ago, we were struggling to break above 639 a share. We finally broke above here on Tuesday, August 12th, which was so bullish, and we broke through with a very large bullish candle. So, great. I mean, there was a risk we went down lower, but buyers bought this dip right up. Strong breakthrough. That's fine. But now we've been consolidating past 3 days. So again, longer term, we're still good. We're still in a strong uptrend, but short term, I would like to see us break out above, because then the risk is, okay, do we give back this breakthrough? Because if we break back below the previous resistance level here, 639, that invalidates this whole move up. It invalidates this bullish candle. And now I would be looking to get back down potentially to the lows from, this was Friday, August 1st, which was, we gapped down large that day. It's a risk. And if there are bad economic numbers and we're really slowing down, and we'll get those numbers Thursday and some more information from Powell on Friday as well, that could all bring us right back down. There's support, which is good. You would want buyers to step in right there, but then you break below, this is 621, I'd be fairly concerned and definitely out of any short to medium term trades. So I'll update you guys on what is happening with the SPY as the news comes out about the economy, some more earnings reports as well. Nvidia's report very soon is a big deal. That's going to be interesting. We'll break that down, of course, on the channel. But right now, the conclusion is market is still bullish. So I have to start with Palantir because the big question is this the most overvalued stock of all time? There are legitimate Wall Street analysts that are saying that. Now, these are the same guys that said it was overvalued back in 2022, 2023. And I do have a tweet, I think on my Twitter, which I barely use. I want to use a bit more for, regular updates, quicker updates. So maybe follow me on Twitter if you're interested, or X nowadays. But I tweeted back in 2023, Palantir will 10x. Obviously, I didn't know for sure. No one knew for sure. But back in 2023, August, it kind of made sense. Those levels were pretty good. The growth was ramping up. And it wasn't a guarantee, but it was a good bet to make. And if you got in heavy back then, you are up a ton. I'm not so sure if it's a 10x from this day specifically, but it's probably close to it, right? We're up a ton since then. But is it too late? Is it way too overvalued? Should you get in now? What is happening? That is always the big question that I have maybe some answers to. Short term, though, what you can do, and what I have been doing, is, despite my opinion, even if I think, or even if you think Palantir is overvalued, fairly valued, undervalued, just follow smart money, see what they're buying, get in, use their strategies, and get out when it makes sense. You had so many politicians past year buy Palantir stock. So many smart money individuals get into this stock. It's up 600% since this representative bought it. This wasn't the only one that bought Palantir. Again, they're supposed to not insider trade, but it probably was the case that she got some knowledge that Palantir was going to maybe receive some really good contracts from the government for the Department of Defense, etc. And maybe she didn't directly receive that info. I don't think it's as blatant as people think, but if you're in the industry and you have friends in other parts of the government and other industries as well that may receive beneficial treatment subsidies from the government, it's obvious that friends talk to each other and that information gets passed through, and then you're able to make really good trades like this and investments if you're a politician or anyone with knowledge in the industry, which is what I like to call smart money. And we could access their flow. We can access what they're buying. We don't know why they're buying it, but we could put the data together, see if the setup looks good, and take a very educated bet based on data using their strategies. And we're putting the odds in our favor to make much more money. And I go through how all that works in this free training module. Links are down below. Why I follow smart money, example of their strategies, and how I've been profiting using all of that. So check out the free training if you have some time. Links are down below. But again, for Palantir's chart specifically, it looks very strong, very good chart. Longer term, I broke this down in my newsletter. I mean, I can't get in and do a set and forget it type of investment because I do think it's overvalued, and I think a pullback will happen. The first level where it looks good longer term is 125. This area, which will align with the 200-day very soon. Buying at the 200-day in a quality compounder is always a good bet. I think it was a Charlie Munger quote back in the day. So that should be good down there, but that would be, from current levels, a 35% drop. So if you're getting in right now longer term, you might be fine and the stock might be up longer term, but you might have to endure a 30% drop, and I don't ideally want to endure that. But if we switch to the EMAs for a shorter term look, there is honestly a safer way to play the stock. It's by simply following smart money flow and following the trend. You could have followed this whole trend up from, here to here, here to here, captured 300% gains in some cases, got out, locked in the profit, and moved on, which may seem risky to some people, but if you follow a rules-based approach, it really is not risky, and it might in some cases be better than just buying long-term, hoping the stock goes up, and it doesn't go up. Now you have a huge unrealized loss. That stuff happens all the time. It happened to so many investors back in 2021 where they bought so many stocks that they thought were great companies, and a lot of those stocks are not back up to their 2021 levels. Some are, the quality ones, but some are not, and those were considered quality back then as well. You just don't know for sure. Palantir, of course, is quality. There was no guarantees though, and now, even though it's still quality, we could pull back hard. The company can continue to exist longer term, but the stock might be struggling for a while as well. We might be flat for 5 to 10 plus years. I don't know if that's going to happen. I'm just saying what is possible. So following a rules-based approach, again, is so important. We're breaking below the 8 EMA short term. I am bearish. There's support at the 21 right here at 169 and support at 150 around there at the 50-day EMA. You need to see buyers step in here. If they don't step in there, that would be very, very concerning. And ideally, you want to actually not break below the post-earnings gap at 171, 170. Breaking below there increases the odds that we fill this gap, we come down even lower, and when there's a falling knife short term, and sellers really pick up the pace, smart money, institutional sellers step in as well. They take part in this, short-term selling momentum. There's a better chance we go down even lower, and then retail looks at this and they say, okay, I have to sell Palantir stocks going down, and we go lower and lower, and maybe we get to the point where Palantir is oversold and it's now a great buy, but we're not there yet. We're not oversold yet. So I'll update you guys on what I'm doing with Palantir. Just watch out short term, even longer term. Even though the company is great, they're a strong company, I don't think they're going to go bankrupt, and I think longer term we will be probably much higher. Short term to maybe medium term as well, we could have a decent pullback. Now, SoFi, in my opinion, looks a lot better of a stock. It's still up a ton recently, up 163%, but this stock has been underappreciated for such a long time. It was bound to happen that we were going to get up to all-time highs and really have some bullish momentum. And short term, I like the semi-consolidation we've been seeing. We're not going straight up, but we're not going down. We're kind of just hanging out in this range here, and we're trying to break above. I would be interested, as long as the overall market still looks good, in some call leaps options. So to go to my brokerage on SoFi, I would go out probably around a year plus out. 2027, 2026 trades looks to be pretty good for the September chain. I would go down to, let's see, around a 80 delta, 74 delta. That looks good. A $17 in the money leap is fine. I'm going to spend around $960 for the call option. So if SoFi in a year from now is at least above my break-even price, which in this case is around 26, 27 bucks a share, then it's pure profit, and I'll make much more money than just buying shares. Buying shares is always great. Dollar cost averaging into quality companies, great strategy. But if you identify a great opportunity, smart money is in as well, and you use proper risk management, you could easily make much more money in a shorter period of time, and it's not a risky gamble. It's based on actual data. Most people, if they just learn a little bit about how they works, would be very satisfied with that outcome, right? So that is what I'll be doing. I want to see a clear breakout. I want to make sure the market is still doing fine. But that looks like a great trade to place at some point very soon, unless we break below our 821, and if we're down and below our 50, I'm out. Those are some of my sell signals. But if the trend continues and we break out above the recent highs of 2420, I'm in. And I think there's a very good chance we continue to go much higher on SoFi. So that's that there. And I would still sell puts on SoFi as well. Again, I don't want to hate on selling puts, because where it makes sense is where you want to sell puts. I do want to sell puts at a lower level. So I would go 34 days out, 27 days out. I would go down to, what's the best strike price I could get? 20, 50 a share. That looks okay. I would get around 31 bucks in premium. This is at the 20.5 level. So 1.5% for the month, which for the year is okay. 18% returns. That's not my goal. I don't want to target 18% returns. I want to target much higher. But if you have market volatility and a lot of stocks are struggling, and you have a good way to generate some income, targeting 18% on a quality stock, if you're assigned at those levels and you're okay with owning SoFi at 20 bucks a share longer term, not a terrible strategy. I wouldn't go all in on selling puts for any stock because I do think in a bull market you will underperform, but in certain instances, for a little bit of income and for small parts of your portfolio, it could make sense. For SoFi, I think it's okay. I'd rather get into call leaps to make more money with risk management, but if the market's struggling but SoFi still looks good, that could be a good option. So that's not there for SoFi, but now for Robinhood, another stock that looks so interesting. Again, right now, I don't know what I want to do longer term. We look great. The company continues to go up, not as overvalued as Palantir, but still, in my opinion, fairly overvalued. There is a lot of bullish smart money flow. I wouldn't be super interested going all in right now, but if we break above previous all-time highs from a couple days ago at 116 a share, I'll zoom in a little bit more here. We are going to continue to go higher. Robinhood continues to innovate, continues to grow. More Robinhood Gold members, sticky subscription service for them. They are doing so great. I do think, again, barring an overall market pullback, we will go higher. And as long as we're above the important moving averages, breadth is up as well. I wouldn't sell puts here. I would get into shares or call options. If you're selling puts on a quality leader like Robinhood, you're probably underperforming the market. You're better off just buying shares, capturing a much more upside if the trend is in your direction. Now, if Robinhood is consolidating and the market is just cooling off a little bit, then maybe sell puts. But also, do I want to own that many shares if I'm selling a couple puts at these high levels to where I do think a larger pullback is possible back down to 100? Longer term, I wouldn't buy shares unless we drop down to like $70 a share. That's just me. So I would much rather follow smart money, get in right now, but take my profits and get out if we start to turn back down. Again, you could, of course, do what you want to do in the market. I'm definitely not a financial advisor. I can't tell you what to do, but I want to help you guys understand what makes the most sense, what smart money is doing, and try to teach people about how this works, because there is a lot of advice on YouTube and on the internet that isn't the best. It's not terrible, but you're going to end up taking much more risk than you ideally should, and you might still underperform in the market as well. Just not a great combination. So that's why I'm going all in on smart money, and that's why I've studied so much what they do, and that's why the trades have been doing so well recently, because this is how they've actually traded and built their wealth longer term. And that's what I'm trying to do for myself. And hopefully you guys enjoy the process as well and maybe get to do it for yourselves as well. And I break down, again, how all that works in my free training. So check that out, guys. Where is the free training? Right there. Links down below. 20-minute plus training, examples of smart money flow, how I traded it personally, how I used their strategies and made a ton of money based on actual data. No guessing, no emotions involved. So check that out when you get some time. Links are down below. For now, subscribe for more weekly update videos like this. If you guys have any questions on these three stocks, chart setups, how smart money trades, anything you guys have, comment down below. I'll try to respond to as many comments as I possibly can. But for now, subscribe for more. Again, the market looks good. I'm a bit concerned short term, but until I see some real bearish signals, I'm still bullish. So you have to be bullish, make money when the market is good and when stock setups are great, but when it turns against us, know how to get out. That is the goal. So if you guys want to learn more about that, again, stay subscribed for more updates. But for now, I'll see you guys in the next one. Peace out, guys.